Hello, everyone. Depending on whichever part of the world you're tuning in from, good morning, good afternoon, and good evening to you. I'm glad to welcome you to another exciting session on the Extreme Speed Life as we take a fresh new perspective of the financial market as the week just began. Well, before we kickstart the live session, I want us to, as usual, confirm that we are good to go this morning. So, if you can see my screen and you can hear my voice clearly without distortion, please let me know in the comment section by typing in hi. So, your typing hi confirms that everything is quite good and fine, so we can get the party started. So I would like to see some feedback, please. If you can see my screen and you can hear my voice clearly, let's see some highs and let's get this party started. Okay, I would like to see some feedbacks. Let's see what we have here. So trying to load up my comments box. Let's see. Okay, let's see what we have. If you can see my screen and you can hear my voice, type in hi. Let's confirm that we are all on the same page here. Okay, I think I can see some feedbacks. 750, thank you very much. 239, thank you. I see 482, 540. Okay. No, it's 7-6. Okay, good afternoon to you. Okay, it's afternoon over there. Brother Ed, good morning. All right. Hey, Carrie, thank you very much. Good morning to you. Yes, another profitable day it is. I received that positive affirmation out there. Now it's 7-6. Okay, thank you very, very much. All right. So I will take this as a positive feedback that we are good to go this morning. My name is Sheriff Daramola, and once again, I welcome you all to yet another promising session. Well, in preparation for the coming this week, I've conducted a comprehensive price action based technical analysis on a handful of financial assets, which is on my watch list for this week. And in fact, I will be sharing with you my discoveries using simple technical setups to uncover potential ideas that could significantly impact our trading decision. So, in the next 1 hour, we will be exploring the historical price movement of these assets, utilizing trend lines, key levels, and of course, chart patterns to gain valuable insight into the market's current dynamic. Today being the first trading day of the week, this is the most important moment for you to drop in any financial instrument you want us to be looking at for the week, be it cryptocurrency, options, commodity, and of course currency pairs. So anyone you drop in the comment section will be what we are going to be monitoring for this week. Though I have a handful of instruments we are going to be looking at too as well. And for those who are joining us for the first time, you are highly welcome on board. In fact, I'm always grateful to have newcomers in the house. And if you're around, please let me know if you're a newcomer in the comment section. So, what we simply do here on a daily basis is to come together as a community in anticipation of the New York trading session. So we come here to manage our positions, that is, if we have any existing position, and at the same time position ourselves in such a way that we can catch potential trading opportunities ahead of the New York session. So we do this on a daily basis, 10 a.m. UTC, and in fact, I would advise you to stay tuned in to the end of the session and try to be in our subsequent editions, as the more time you spend with us, the more you will be able to use this information you have gathered here to eventually make your own independent decision on your account. So once again, you are welcome. So, with that being said, here we are going to be diving right into the business for today. And as usual, the first thing we normally do is to keep tabs with the fundamental aspect of the market. And you all know that these fundamental factors often manifest on the chart in technical patterns and, of course, price movement. By monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns. And this will also help us in better timing ourselves in such a way that we can catch potential trading opportunities ahead, during, and even these events. So for today, I was able to pull out a couple of high impact events coming in from both the US and the UK economic dockets. And the first high impact event for today is the what's it called? The S&P Global. Hold on a second. So we have the S&P Global CIPS Composite, which is based on a large number of business executives in private sector. So this data is usually released on the third working day of each month. Each response is weighted according to the size of company and its contribution to total manufacturing or services output. So this is another high impact event, and any data here, any high data here, it gives us a positive signal for the pound sterling. Then we also have the manufacturing PMI, which traders are always looking forward to, and it gives us an idea into the economic situation of the UK. And any reading above 50 signals expansion, while a reading under 50 shows contraction. And this data here happened about an hour ago. As you will see, we had a figure beyond expectations, giving us a negative variance on all the S&P global publications we have here. So for the CIPS composite, we had a negative deviation of 2.62. And for the manufacturing PMI, we had a negative deviation of 1.39, and the CIPS services PMI with a negative deviation of 2.19. So these are not palatable figures for the pound sterling, and in fact, we're beginning to see some bearish traction as regards as market reacted to this event. So we are going to be looking forward to how the market has reacted and how we also going to be positioning ourselves ahead of the New York session on the GBP USD. Then in about 2 hours from now, we are also going to be having the S&P Global Manufacturing PMI for the US economic docket, which is coming up in about 2 hours from now, and also the Global Services PMI. So we are going to be looking forward to what the actual data is going to be like. Will it be beyond expectations, below expectations, or even just coming as the same thing that was projected? Well, we are of course going to be seeing the anticipation of this event reflect on the chart as price action. So as a result of that, we are going to be diving into the chart to look at the current market structure from a technical standpoint. So the first instrument on our watch list for today is going to be the US All Spot, and in fact, I already have a buy position running on the US All Spot this morning. In fact, I have 2 positions running at this point. But before we go into the details on what led into the idea of buying the US All Spot, first of all, let's run through the higher time frame to have an holistic perspective into what is really going on in this particular market. And what I was able to do here while trying to identify potential trading activities for this week, I was able to use the 4 hours time frame. And right here on the 4 hours time frame, I was able to identify a couple of trend lines and key levels that we are going to be using to guide our trading activity. And in fact, while trying to decipher what is going on here, I went on to look at the nature of price action since the beginning of this month, and it is quite obvious that price action has been bullish. And if we connect the series of higher highs and higher lows we have an ascending channel that has been guiding this momentum since the beginning of this month. Now, this is what we are going to be using to guide our trading activity for this week. Then, in addition to the trend lines, these levels here are the $75 level and, of course, the $77.20 area. So it is quite obvious that price action has been caught within that range since the second week of this month. I think we've seen price confined within this $77.20 level and, of course, the $75 level to give us an insight into the level of indecision in this particular market. And you know how we do it in this community. When price action falls within this kind of range, we want to remain patient, waiting for a signal to come up, which of course comes in the form of either a breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. Then coupled with that levels there is this ascending trend line, which I will be looking out for selling opportunities if price action ever breaks down, retest this descending trend line for this week. But if we consider the continued bullish momentum in the last couple of weeks, the potential of a breakout of the $77.20 level seems promising for this week. So in order to have a better perspective into what is really going on in this market, we're going to be scaling down into the 1 hour time frame to see how the market has been reacting below the $77.20 level to decide what our next line of action will be. Now, when we scale down into the 1 hour time frame, this is what I was able to come up with this morning while trying to decipher what could go on in this market. Now, the first thing I was able to observe on the 1 hour time frame was the fact that price action, the market opened with a bearish gap, as you will see here, as we saw price close last week at around the $76.84 level, and we saw price open this morning at around the $76.50 level to give us an insight into the institutional sentiment during the course of the weekend. However, one interesting thing that happened here, despite the bearish gap, was the fact that price was confined within a range for the first 9 hours I saw, between the $77 area and of course the $76.50 level to give us a flat channel to work with. And you know how we do it in this community. Whenever we identify a simple flat channel like this, we want to remain patient, waiting for a signal which will come either in the form of a breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And of course, we know that when price action falls within a range like this, it just tells us how much the participants in the market are indecisive of what the course of action will be. Now, with our stop orders placed at both ends, personally, I had my buy position triggered, as you will see here, and of course added more positions at the breakout of the $77.20 level. Now, with this situation right now, I have about 60 pips in the first position and about 40 pips on the second position, totaling 100 pips in profit. For those who took advantage of this, for those who spotted and took advantage of the setup, well done to you for being on standby to catch that move. However, for those who missed out on this opportunity, well, there is no cause for alarm. The week is still very early and there is still more potential in this market that we can take advantage of before the week runs out. Now, with this current situation right now, for those who had bought the US All Sport, I'm going to be advising you to move all stop losses to secure this current buy position, and the most appropriate area is to move all stop losses within the $77.20 and anywhere below the $77 area. And the reason why we want to be moving our stop losses is simply because we want to secure the current position while we wait out and see if the market will continue to the upside. And of course, while trying to secure our position, we want to be giving enough room for price action to breathe. Now, with the situation here and following the breakout of the structure, we all know from a technical standpoint when price action breaks out of a key significant structure such as what we have here, we expect that one point in time price is likely going to come back to retest the broken structure. Now, this will give us an opportunity, this will give those who missed out on this breakout an opportunity to join this bullish momentum if price action comes back to retest the structure. Now, one interesting thing about this structure, which I also want to call our attention to, is how this level has been a very strong selling niche in the past, as you will see during the second week of this month. And the breakout of this structure here could be a sign that price have taken out all the sell positions around that area to incite a potential bullish move. Now, at this point in time, we want to remain patient. That is for those who missed out on this opportunity, waiting for price to come back and retest the structure, and the appearance of buy pressure around this area would incite another wave of bullish momentum. And one of the patterns we are going to be looking at when price gets back into the structure is a reversal pattern. It could be a double bottom structure, head and shoulder pattern, or even a falling wedge to look out for buying opportunity if price action even come close to this zone. However, if price action does not drop to the downside and instead it begins to it falls within a choppy situation where it falls into a range, it could evolve into a bullish rectangle pattern or a flag pattern or a pennant, whichever case it may be. A breakout retest of that range will definitely welcome a trend continuation. So at this point in time, we have two options to wait for trading opportunities. One is if price will come back and retest the structure, we can join the trend continuation, or we wait for a consolidation phase to happen, which could transition into either a bullish rectangle pattern, a flag pattern, or a pennant, where we look out for the breakout retest of that structure to join an uptrend continuation. So that is how we are going to be managing our positions on the US All Spot for today. And for those who took advantage of this buy position, I already told you that you want to be moving your stop losses to secure this current buy position. Now, you know how we do it in this community. In as much as we're looking out for buying opportunity, we also want to consider the potentials of sellers too in this market. Now, what do we want to see on this chart that will make us change our bias from bullish to bearish? Well, with the scenario we have here and considering the fact that price action just broke out of that level at the $77.20 area, I'm of the opinion that things are looking very bullish at this point. But if it happens that the breakout here turns out to be a false breakout, then we are likely going to be seeing price action drop back below the $77.20. Now, if price drops below the $77.20 level and we begin to see signs that buyers are finding it difficult to break back above the $77.20 level, then at this point we will start considering selling the US All Spot, where selling below the 77.20 or the $77 area will welcome more selling opportunities in this market. So this is how we are going to be considering selling at this point, but I doubt if this is going to be happening today. But if it does happen, we want to be on standby to catch that move. So these are my views here on the US All Spot for today. So I will be taking the next 10 to 15 seconds to wait and see if there are any questions as regards to this current setup before we move on to the next instrument. And you can as well use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your trading activities for today. So I'll be taking the next 10 to 15 seconds to see if there are any questions before we move on to the next instrument. All right, so in the absence of no questions, I want to assume that we're on the same page. I see your comment 284 422. I see your comment 8603. I see your comment too. Then I saw Nisa Kani asking us to talk about gold. Of course, we shall be looking at gold too, so try to stay tuned in so you don't miss out on that gold session. So with that being said, here we shall be diving right back into the chart and taking on the next instrument on our watch list. I see a comment here, 202-92651, asking, can we use moving average of, well, personally, I don't use all these technical indicators, so I focus mainly on price action, and how price action moves tells me how the market participants are thinking, and then using key levels also to guide our trading activities. So for this structure here, all we need has been highlighted on the chart. So if you take a screenshot, you will see these levels will be guiding our trading activities for today. So I hope I answered your question 651. So on that note, we shall be moving on to the next instrument on our watch list. So the next instrument on my watch list for today is the GBP USD, and in fact I have a sell position running at this point in time, and in fact we've moved our stop losses to secure this position right now, as there are some signs we're beginning to see here that might likely change the scope of this market. But before we go into the details here, I would like us to scale up into the higher time frame so that we can have an holistic perspective into what is really going on in the market and why I have made a decision I have made so far this morning. So the first thing I did here on the GBP USD was to scale up into the 4 hours time frame, where I want to see things from an holistic standpoint. Now, looking at the 4 hours time frame here, what I did first of all was to consider the nature of price action since the beginning of this month. And looking at the structure here since the beginning of the month, it is quite obvious that price action has been bullish. And to further emphasize the strength of the buyers in this particular market, I was able to connect the series of lower higher lows. I think I just lost my network right now. Are you all with me? If you are with me, please let me know in the comment section. uh Sorry for the break in transmission. We had network issues, so I had to switch routers to ensure that we come back live. So I'm sorry for that break in transmission. So we were talking about the GBP USD, and we were trying to decipher what our next line of action would be during the New York session today. And while trying to do that, we scaled up into the 4 hours time frame, where I was telling you that we want to take an holistic perspective of what is really going on in the market. And to guide our trading activities, I was able to identify a couple of structures here which we are going to be using. And one thing you would observe on the 4 hours time frame here is that price action has been very bullish. And to further emphasize the strength of the buyers here, you will see price action has been finding higher lows. And when we connect the series of higher lows here, we have a couple of trend lines that has been supporting this bullish momentum since the beginning of this month. So we have the major bullish trend line, which is a thick one I just highlighted, before we saw the deviation that happened on the 5th of this month, as we have another ascending trend line spring out from that major ascending trend line. And one interesting thing about the second ascending trend line is that it has been supporting this bullish momentum in the last couple of weeks now. And going into the new week, this ascending trend line is going to be a major factor that will determine what our next line of action will be. Then in addition to that trend line is that key level situated at the 1.28400 area. Now look at that level right there. It has been a major determinant of price action, at least since the mid-month of June. As you will see here, that this level was initially a strong selling niche at one point. Then later in the mid-month of June, third week of June, we saw it serve as another selling niche at that point. It was another selling niche here a couple of weeks ago before we finally saw the breakout of the structure during the upper week. Now, with the situation we have here, price climbed up, and it appears price action is back into that key level. And since it tested that key level, we have been noticing some buy pressure around this area. Now, at this point, you would agree with me that we are at a crucial moment in the market right now, where the key level at the 1.28400 level also shares a beautiful confluence with that ascending trend line we identified earlier. Now, the question going into the New York session today is that, will this ascending trend line be respected one more time to incite another wave of bullish momentum, or are we going to be seeing a situation where the trend line will be broken to the downside, bringing price into probably around the 1.27 area, which also shares a confluence with that major ascending trend line we identified earlier, probably to incite a trend continuation or a breakdown to incite a sell-off. Now, since we have a beautiful confluence right now where price action shares confluence with the 1.284, I have the opinion that we want to be scaling down into the lower time frame to see how market participants have been reacting to that key level since the beginning of this week, and this will give us an idea of where we are likely going to be going. Now, scaling down into the 1 hour time frame, I was able to, while trying to decipher what could happen this morning, I was able to dissect the current market structure. And the first thing I observed was that the first 8 hours in the market, we saw price action fell within a range, trapped within that range for a while before the breakout of that range happened. So while I was trying to analyze, the breakout had already happened, so I was looking forward to a retest of structure to join that bullish move, which never happened, as we saw price action drop down, break down also this ascending trend line to incite a sell-off in this particular market. And coupled with the negative data coming in from the United Kingdom's economic events, it didn't help matters at all, as we saw price drop to the downside welcoming my first sell position for the week at the breakdown of the 1.2849. If you are taking advantage of that move, well done to you for being on standby to catch that one. And if you have a sell position running right now, I will be advising you to move all stop losses to that area between the 1.285 and of course the 1.28480 area to secure this current sell position, as anything could still happen from this level. Now, for those who had missed out on that opportunity, well, there's no other choice for than to wait patiently for new structures to mature before we want to be jumping into any position. Now, the question based on this current market structure here, hold on a second, let me zoom this in a little bit because I want us to see the key level for the week. So remember, this is our key level for the week, situated at the 1.284. And you know how we use our key level in this community. When price action remains above our key level, we want to be looking out for patterns and structures that will support the idea of buying. And if price action drops below the key level, we want to be looking out for patterns and structures that will support the idea of selling. Now, with the way things are looking right now, price is below the key level. Of course, this should signal the idea of looking out for selling opportunities. But one thing here that is making me think otherwise or take a closer look at the structure is what has been going on around the 1.282 level. Now, if you look at the structure closely, on Friday of last week trading session, we saw how buying pressure resumed around that area. Now, the same thing also has happened in the last couple of hours. So despite the strong bearish impulsive move we witnessed following the UK's economic data, we saw that as soon as price got into that 1.282 level, we saw buy pressure resume again around that area. Now, it is quite clear that sellers are struggling around the zone, which made me to mark this level as a temporary demand zone, as I want to see how the market will be reacting to this level to decide if we are truly going to be selling the GBP USD further to the downside. Now, for those who had missed out on the sell position, I told us we'll hold on. At this point in time, I would want to see price action break down this demand zone for me to consider adding more sell position to my existing trade. And this will also be a welcome opportunity for those who missed out on that first sell position to join this bearish move to the downside. And one interesting thing about this temporary demand zone here is the fact that it also shares a confluence with that ascending trend line I shared with you on the higher time frame. Now, if a breakdown of this demand zone happens, it would have also broken down that ascending trend line, which will be the first time price action will be breaking down that trend line in the last 3 weeks. Now, a breakdown of that trend line will definitely signal an opportunity to sell, but remember that we are not going to be jumping into conclusions here, so we are not having a sell stop order, but instead we shall remain patient, waiting for a confirmation before we join this bearish move to the downside. And a confirmation will come in the form of a retest of structure. So once the breakdown happens, we scale down to our lower time frame. It could be your 10 minutes, 5 minutes, or 15 minutes time frame to look out for signs that buyers are finding it difficult to climb back above that demand zone, and this would reflect on the chart as a retest of either the demand zone or that ascending trend line to give us an opportunity to join a sell position. And if you're already in a sell position, you want to be adding more position, have the breakdown retest of this structure. So this is how we are going to be joining a bearish momentum to the downside. Now, another thing about selling the GBP USD here is that remember that price action just broke down key structures here, our key level at the 1.284 and of course the 1.2849, which was serving as the support line at the beginning of the week. Now, if a breakdown of structures happened right now, a retest of structure could also incite selling momentum, but one thing for us to look out for here is if price comes back to retest the zone, we want to see continued selling pressure around this area to give us a sign to join a bearish move. But personally, I would just tell us to hold on for the breakdown of this demand zone to happen, where price breaking down the structure would have taken out all the demand zone here, giving us enough confidence to be part of a bearish move. Now, that is how we are going to be taking advantage of selling the GBP USD today. However, in as much as we're looking out for selling opportunities here, you know how we do it in this community, we also want to keep tabs with the opposite direction too as well. So with the situation we have here, what will make us want to consider buying the GBP USD? Now, price action has of course been bearish since the last week now, and with the way things are, we notice that this temporary demand zone has been rejecting all attempt by the sellers to break through that structure. Now, the question here now is, will this demand zone become a platform that will drive a bullish momentum for this week? And if it does going to be, what do we want to see here to make us join a bullish move? Now, personally, I want to see price action climb back above my 1.284, which happens to be our key level. You know, whenever we have key levels, we want to see price action climb above. Then we look out for patterns and structures that will support the idea of buying. Now, to support the idea of buying here, I'm going to be identifying a trend line here, which I'm going to be using as a yardstick to guide any bullish momentum here. And of course, we can use it to guide our bearish momentum. That is, if price action remains below the bearish trend line, we shall feel comfortable in a sell position. So I will make this a red color. So for us to buy here, we want to see price break out of that trend line to the upside, breaking out of that key level. Then we want to see confirmations like a retest of structure. It could be the retest of the trend line or the retest of the key level, but most importantly, we want to be seeing patterns such as double bottom structures, head and shoulder pattern, reversal patterns, insinuating that buyers are gradually gaining momentum for us to join a bullish move. And if that happens, a further breakout of the 1.28700 level will be welcoming more buying opportunities in this particular market. So that is how we are going to be buying the GBP USD for today. A breakout of the descending trend line is what we are looking at to buy the GBP USD, and if price remains below the descending trend line, a further breakdown of that demand zone at the 1.282 will welcome selling opportunities in this particular market. So we want to be marking out those levels right now. If you have a sell position running, move your stop losses to secure the current position while we wait out for more opportunities to maximize the potential of the market will present to us today. So if you have any questions regarding what I just explained, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions before we move into the next instrument for today. All right, so in the absence of no questions, I want to assume that we're on the same page here. So we shall be moving right into the next instrument on our watch list for today. So the next instrument on our watch list for today is my favorite, the XAU USD, the gold spot. So I already have a buy position running at this point, and I want to be sharing with you what led to the idea of considering buying at this particular point in time. Now let's scale back up into the higher time frame where we are going to be looking at things from an holistic point of view to have a better understanding of what is really going on in this market. Now, while scaling up into the 4 hours time frame, I was able to take into consideration the nature of price actions activity since the beginning of this month. And one obvious fact here you will see on your screen is the fact that price action has been bullish. And if we take a step further to connect the series of higher lows, in fact, we have a couple of trend lines here which has been supporting this bullish momentum in the last 3 weeks. Now, with this situation here, it is obvious that you, of course, want to be looking out for buying opportunity as long as price action remains above the ascending trend line. Now, in addition to this trend line here is a key level which I was able to spot at the 1960. In fact, this level as goes all the way back into last year, but for the sake of this session, we will be taking into consideration what has been going on since the month of June. Now, if you look at this key level closely, you will see how it has been a major determinant of selling pressure at some point in the month of June, as you will see selling pressure around this area. Then if we fast forward into the mid-month of July, we saw selling pressure here before we saw this phenomenal bullish momentum spring out of the structure during the course of last week's trading session, giving us the privilege of joining that bullish momentum, if you remember. And price action climbed significantly to the upside, testing the 1987 level, where we saw another sell pressure resume around that area. And of course, we were also part of this bearish move last week as price action dropped back into that key level at the 1960 level again. So you would agree with me that this key level is a very strong area where when price action gets into that area, whatever happens there will determine where price action is likely going to be going. Now, one interesting thing about that key level again on the structure is the fact that it also shares a beautiful confluence with that ascending trend line we identified earlier. Now, the question going into the new week now is, will price action respect the ascending trend line one more time to incite an uptrend continuation, or are we going to be seeing a situation where the trend line will be broken to the downside to incite a sell-off in this market? Now, for us to have a better perspective into this, we would need to scale down into a lower time frame to see how market participant has been reacting to the 1960 level since price action tested that area on Friday of last week. But mere looking at the structure here on the 4 hours time frame, it is quite obvious that we have been noticing some buy pressure around this area, further emphasizing the strength of the buyers and increasing the chances of a bullish momentum from this area. But let's scale down into the 1 hour time frame where we are going to be seeing things more clearly. Now, on the 1 hour time frame, while trying to dissect what could happen this morning on the XAU USD, I was able to spot a simple flat channel. As you will see, price action was caught within this range for the first 10 hours in this market between the $1,962.50 level and the 1958 area to give us an insight into the level of indecision at this point. Then, in addition to this flat channel I was able to spot here was this demand zone around the 1958 zone. Of course, you will see how sellers have struggled around this area since Friday last week. We saw how sellers came in here but were unable to break through that structure as buyers came in to negate all sellers' attempts. The same thing has also been happening here since the beginning of this week. As you will see, sellers have been struggling as soon as price got into this area, as you will see here. And one interesting thing that happened in the last hour is this engulfing bullish candle springing out of that demand zone to further emphasize the strength of the buyers around this area. Now remember that we had a key level, we had a range where price action was caught within, and you know how we do it whenever we have this kind of range. A breakdown will welcome selling opportunities, while a breakout will welcome buying opportunities. Now, coupled with the demand zone here, buying above the $1,962.50 level looks very promising, and as you can see, I have a buy position triggered at that point. So at this point in time, I have a buy position running, and for those who took advantage of this opportunity, well done to you for being on standby to catch that move. But if you have missed out on this opportunity, but it's okay, the week is still very early, and I'm of the opinion that the market could still present more opportunities to capitalize on this move. Now, looking at it from a technical standpoint, whenever price action breaks out of a key structure such as this one, we expect that price at some point will come back to retest structure. So let's see if the market will come back and retest that structure in anticipation of an uptrend continuation. But if that does not happen, then we want to be looking forward to a trend continuation pattern, and I'm of the opinion that we have a level right here at the 1968 level, which falls around this area. I will be showing you something in a moment. Let's label this area. Of course, you do want to be marking out those levels on your chart. So we have the 1968 level. So now look at the structure here. This level was a demand zone at some point right here before price action broke down the structure, and then of course retested it here on last week Friday, and it appears price action is approaching that area here. So I would want to see a breakout of the structure to welcome more position to join an uptrend. Now, price action, if price does not drop into the 1962, then there is a likelihood that we could have a trend continuation pattern like a pennant, flag pattern, or an uptrend, or a bullish rectangular pattern where the breakout of that structure will welcome a trend continuation to the upside. So at this point in time, we have a bullish momentum running, and one thing we are going to be doing here is as soon as price gets into the 1968, we want to be moving all stop losses to secure all buy position if you are in one, and as we wait and see how the market will be reacting to this level to determine what our next line of action will be. So if selling pressure resumes, we might see price retrace back to retest the structure to incite another wave. But if price action breaks out of the 1968, then we shall be buckling up for another opportunity to join that bullish move to the upside. So this is how we are going to be looking out for buying opportunities at this point. Now, for me to consider selling the XAU-USD at this juncture, it is very important that we see this demand zone at the 1000, between the 1960. Let me do it like this: between the 1960 and the 1958 to be broken to the downside before we can consider selling the XAU-USD. So we want to see price action break down, retest the structure before considering an opportunity to sell this commodity at this point. So if the breakdown of this demand zone does not happen, I wouldn't be thinking of selling the XAU-USD. So at this point, it's still looking very bullish. So let's be on standby to capture any potential move to the upside from this area. So if you have any questions regarding what I just explained here, or you need me to do clarification, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions before we move into the last instrument for today, because we're already running out of time. All right, so in the absence of no questions, I want to assume that we're on the same page here. And I hope 651 was part of the, who was that asking after the XAUSD earlier? I think I saw someone. Okay, Nisa Kani, I hope you're around to be part of that XAUSD session. All right, so in the absence of no questions, we shall be moving on to the last instrument. And in fact, I skipped the US Tech 100. Why did I do that? Or have we treated it? Of course, we haven't. So the next instrument on our watch list then will be the US Tech 100. So right here on the US Tech 100, it was a very profitable previous week for us on this instrument. So let's see if we can replicate the scenario we had last week on this one this week. So going into the higher time frame, so we want to see how things are looking like on the 4 hours time frame. So on the 4 hours time frame, this was what I was able to spot here while trying to decipher how to manage this, manage a trade on the US Tech 100. So I went to as far back as the month of April to try and see how the market has been playing out, unfolding on this chart. And of course, we all know that since the beginning of the year, the US Tech 100 has been very bullish. And if we look at what has been going on here since the month of April, we can see price, of course, has been bullish. And in fact, I have a couple of trend lines here, which of course has been supporting this uptrend continuation. Now, the second one is right here, which has been supporting this momentum since, when was that? Since the month of May of this year. Now, in addition to this ascending trend line, we have a couple of key levels. So we had a key level at the 15,300, which was broken finally during the upper week. Remember, this level was a very strong selling niche at some point since the month of June. We saw selling niche here. We saw selling niche here before we saw the breakout of the structure happen here. Now, the breakout of the structure led price into a new high at the 15,950, after which we have seen selling pressure resume, which I'm of the opinion that this is probably going to be a retracement of that impulsive move. Now, the question here is how far this retracement phase is going to go. Remember, this structure was, let me delete this one. I don't want our chart to be too clumsy. So remember, we had the breakout of this 15,300 during the upper trading week. And from a technical standpoint, when price breaks out of a key structure such as this, we expect it to come back and retest that level to incite another trend continuation to the upside. Now, we don't know how far this retracement phase that has been going on since last week will go. And in fact, we have a trend line here. And of course, we have this 15,300 level, which was broken. And of course, we have the ascending major trend line here, which is a thick blue line on your screen. So how far will this retracement phase go is what we really do not know at this point. Will it get into this trend line, or the 15,300, or this major ascending trend line before a bullish momentum happens? Now, to have a better perspective into what is going on here, we will need to scale down into the lower time frame, where we want to see how market participant has been reacting to the zone around the 15,450 to determine if we are going to be seeing selling pressure or probably a bearish continuation pattern that could likely push price to any of these trend lines, key level at the 15,300, or this one before another wave of bullish momentum happens. And of course, if that happens, we have privilege of joining about a minimum of 80 pips to 160 and a maximum of about 300 pips before another bullish momentum happens. But if we start seeing reversal patterns here, like a double bottom structure, then we'll have no other choice than to join a trend continuation from that area, as of course price still remains above our ascending trend line we identified earlier. So let's scale down into the lower time frame. So right here on the 1 hour time frame, this was what I was able to come up with while trying to dissect the current 1 hour time frame. Now, if you look at the structure closely, you will see that since the beginning of this week, price action has been very, very indecisive in this market. As you will see, price was confined within the 15,450, sorry, and the 15,410 level to emphasize the level of indecision at this point. And one thing about this structure is that you will see that within this whole range we have here, if we go to what happened on Thursday and Friday of last week trading session, we will see that this is more of a buyer's territory, as we saw that as soon as selling pressure got into that area, we saw our buyers negated all sellers attempt to break through that structure. The same thing also happened on Friday, as you will see here, making me believe that we are within a buyer's territory as long as price action remains around that zone between the 15,450 and the 15,410. So what this simply means is that if we are going to be considering selling the US Tech 100, we definitely want to see price action slice through the support line at the 15,410 level to consider selling the US Tech 100. Now remember that we have this ascending trend line, which of course is reflecting on our 1 hour time frame. So I will try to highlight it so that we can see it clearly. So we have the ascending trend line here. So if price breaks down this ascending trend line, then we would be getting ready to join a bearish move. So that means we can actually capture a bearish move even before the breakdown of the support line happens. Now, for us to capture this bearish move, we want to see price action break down the ascending trend line first of all. And remember that we are not going to be getting too excited when the breakdown happens, as we would need a confirmation to give us a leverage to join the bearish move. So in order to identify the confirmation, we would need to scale down into our lower time frame, such as the 5, 10, or 50 minutes time frame, to look out for retest of the trend line followed by continued selling pressure. This is signs that buyers are unable to climb back above the ascending trend line. Then we could join the bearish move to the downside and of course have a sell stop order below the 15,410 to capitalize on that bearish move. So this is the only condition we are going to be seeing from this juncture in the market that will make us consider selling the US Tech 100. Now, with that being said here, and for the fact that price still remains above the ascending trend line, we are of course going to remain bullish in this particular market. And personally, I had the buy position triggered as soon as price action broke out of the 15,450, which is currently running as break even at this point in time. Let's see how the market is going to play out. For the sell stop on the buy position, we want to be having it at the support line here, which will be dovetailing to between 35 to 40 pips as a stop loss for any bullish momentum at this particular point in time. So here we are, it's looking very bullish as long as price remains above this ascending trend line. So we remain bullish, and the only thing that will make us want to sell is for price to break down this trend line, retest of structure before we can consider selling the US Tech 100. Then another thing I want us to see here is the highest point so far this week, which is situated at the 15,480, which could also be a platform for us to maximize the potential of this bullish move. So you want to be marking this level out on your chart, 15,480 level. So if price action does break out to retest that level, we also want to be adding more buy position to our existing trade. So let's hold on to these bullish buyers as long as price remains above that ascending trend line. So these are my views here on the US Tech 100 for today. If you have any questions, feel free to let me know in the comment section. And for those who would like to mark out these levels on your chart. You have the floor. So the next 10 to 15 seconds, I will be waiting for comments or inquiries, and you can as well use that time to mark out this level on your chart, as you will be needing them as a reference point to guide your trading activities for today. All right, all right. So, in the absence of no questions, I want to assume that we are all on the same page here. And it has been a wonderful moment with you guys. I really, really appreciate every single moment I shared with you. So, today, so far, so good. We were able to treat four financial assets. We were able to take on the US All Spot, the US Tech 100, GBP USD, and of course the XAU USD. So we have four financial instruments on our watch list for this week, which of course we are going to be monitoring throughout the course of the week. So, for those who are joining us for the first time, I hope you are able to gain one or two things from what we discuss here. And in fact, the more time you spend with us, the more you'll be able to use the information you have gathered here to make your independent trading decision. And so I'm very confident that we are all prepared and ready for the New York sessions. We have been able to simulate all the potential scenarios that are likely going to be happening today. And don't forget that we have an economic event coming up in about an hour from now, I guess, about an hour 45 minutes from now, and that is the S&P Global publication coming in from the US economic docket, which is one event that majority in the market will be looking forward to, and it could likely send in some volatility in the market. So if you have any positions running, you definitely want to be moving your stop losses to secure the positions while we wait out for new opportunities on the current market structures we have analyzed and reviewed today. So it's on this note I wish you best of luck during the New York session today, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well the instrument has been doing so far, while we also get ready for the New York session tomorrow. Do have a wonderful evening, everyone. Bye bye.